we're looking at cost-benefit analysis by those who think that we should have lower standards, lower capital standards. And one of the reasons for that is when you do the cost-benefit analysis, you leave out the social costs, the political costs, the cost to the fabric of our society. Going back to what caused Basel III, namely the 2008 meltdown. If you just look at the economics, you can say, hey, we actually made money bailing out the banks. No cost. Cost-benefit analysis. That may be true. We lost some money bailing out the auto companies. Maybe we should have held the stock a little longer, but that's a side issue. The reason for that was that they came to us with the Toxic Asset Recovery Program, TARP, and a lot of us put some pressure on, and they ended up buying preferred stock rather than the toxic assets. Had they bought the toxic assets, we would have lost hundreds of billions, and the effect. But even with us not losing any money on the bank bailout, the damage to the social contract. How many of us have been told by every group that wants anything, well, you gave it to the banks, give it to us. And then this was added to by the Silicon Valley and New Republic problem, which just added to this idea that banks are bailed out, nothing really is fair in our society, and give me mine. We're told that we can't possibly know the effect of these new regulations, and we can't. But we also can't possibly know the effect of not adopting these regulations. That's the thing about the future. Now, I'm concerned, Ms. Valladares, about the effect this is going to have on IPOs. How will these standards discourage banks from participating in IPOs and otherwise in the capital markets?
The question is for whom?
For you.
Oh, right. There is no reason it would discourage IPOs.
Do the other witnesses agree?
No.
Okay, I'll hear from both sides then very quickly.
So there's, sorry. Go ahead. Go ahead. Right. There is an initial public offering right now. In fact, for many companies, many of them might prefer it because of the elevated interest rate environment, right? So there is no proof that having banks that are safer is going to impact IPOs. Banks that are safer...
But if you particularly raise the capital requirements on that segment, it's going to cause the banks to do less in that segment.
It wouldn't.
I'll ask the witness next to you whether she has a quick comment, because I got to go on to another subject.
Sure. Thank you, sir. We're in a secular decline for IPOs over the last 10 years. We have to understand we have fewer and fewer public companies, the pressure from many parts. There will be greater operational risk and fee capital, and I think on balance that's going to be more than the lack of preferential weights on unlisted companies.
Okay.
So I think it's a risk.
Thank you. I want to go on to another thing, and that is raising capital standards is the bluntest way to assure banks don't go under. The better way to do it is to look at the individual assets and do good bank examination. And that is where I think our regulators have failed us, because they've ignored interest rate risk. Now, when you pay attention to credit risk, that's a reason not to make a loan to a local government. When you pay attention to interest rate risk, that's a reason to not buy a 30-year treasury. Well, how did Silicon Valley Bank was famous for loaning money to startups, and yet they lost their money by buying the 30-year treasuries. And we still see a situation where, and I have legislation on this, the stress tests don't look at the number one stress is what happens if interest rates go up. As a matter of fact, they once did a stress test about what happens if interest rates go down, which isn't a bad stress test, but isn't so bad. The one other illustration of how poorly crafted regulations can necessitate higher capital rates is they're going to give no credit to private mortgage insurance. In what world is private mortgage insurance irrelevant to the creditor. As a matter of fact, the creditor is the one that makes sure that the home buyer gets the private mortgage insurance. So I'd have a lot more faith in these rules if they looked at a little bit, didn't use the blunt instrument of just raising the rates and instead looked at better bank examination. I yield back.